All right, folks, John Najarian here from Market Rebellion and giving you an update on what we know, what we've seen so far today. Been a crazy day already, folks, and we're just getting started, apparently. So, I just want to reiterate something that I said last week, which was that Steve Leisman and I spoke on Friday about whether or not we would see some coordinated effort by central banks. And we both thought that that was something that we would see. And we thought all they'd have to do is make a statement. Neither Steve nor I said that we thought it was necessary that we see a cut right now. I thought we could spend that capital better by just making a statement. Apparently our Fed disagrees, but then again, I digress. Let me go through a little bit of what went on. So this morning, as you're looking at this chart, this is the S&P 500. We were told that G7 and various folks were going to do a meeting, and they were going to have some sort of a statement. And they basically came out and said, you know what, we're not ready to make a coordinated statement about putting everything we have behind this thing to make sure that small businesses can borrow, because that's something people are concerned about, and or to keep economies rolling, even as some economies have been shuttered by, of course, the virus, the coronavirus, and the impact of conferences being canceled, of for instance, American Airlines canceled flights to South Korea until April 24th. All those kinds of things are obviously impeding growth and certainly threaten to send many of these areas into either flat or deeper recessions, depending on what areas of the world we're talking about. So, with that as a backdrop, we had an anticipation that something positive would come out, and when we didn't get that, the market sold off. And then, as we began our regular trading session, which would be right about here on the chart, these are in Eastern times, of course, 9:30 Eastern's when we open. We were pretty close to unchanged at that point, and sold off all the way to a loss right here of about 1 1/3%, and that was a half an hour into the day. Just so happens that moments later at 10 o'clock, we did indeed get the statement from the Fed, and that statement from the Fed was that they were going to cut interest rates by 50 bips, 50 basis points. That is a pretty large cut, and I wish that they would have spent that in a different way. I thought that they could have gone out and made the statement, but you know, the Fed doesn't listen to me, doesn't really listen to the president. A lot of people think that, oh, because they did this is because of Trump's bullying. I don't really see it that way. I think they were this was a unanimous decision, folks. When you get a unanimous decision out of this or any Fed, I believe they truly thought that this was something that was necessary, and if you're going to hit it, let's not hit it with 25 bips, let's hit it with 50. So they did. And there you see, just in a matter of seconds, us flipping from a loss of 1 1/3% to a rally that carried us all the way up here to approximately there, so a gain of about 1 1/3%. Those are pretty big flips back and forth. Then, as you see, over the next 15 minutes, we sold back down to being down 1/3 of a point. We sat there trying to make it back and trading along this line before just dumping out here to a loss of right around 2%. So, not exactly a, this is not a I told you so moment at all. I'm not saying I'm smarter than the Fed and Jay Powell and all that. I'm just saying what I thought the market was looking for versus what the market got from those central bankers and then what it got from the Fed. So this was pretty much a smack right in the face based on what they had hoped to see, folks, as far as, could we continue on what we saw yesterday, and that's why we see the reaction that we see today. Now, I also told you that I'd talk a little bit about, well, everything from swaps trading, which hit a record high just recently, to some of the best opportunities in the market here as we're trading here today. Because we every day see unusual activities build and ebb and so forth. And I thought a lot of you, since neither Pete nor I are on the halftime report today, they've got a great lineup. They've got Mark Lazary, they've got Alarian, they've got a host of really smart folks that are going to be on that show today. And I doubt if many of them, though, are going to be talking about some of the things that we're going to be looking at here. So I thought I'd mention them now. So for instance, SLV. This is the Silver Trust ETF. SLV. Just typing in here for a sec. Just give me half a second here. SLV. There we go. So when I'm looking at the SLV, and for instance, we're going to try to pull up a chart here, SLV. I'll tell you which strikes they're buying and so forth. The GLD and the SLV are different, of course, even though both are precious metals. I really prefer to trade the GLD most of the time because I get what I hope will be a little protection as far as fast money flows into something like an asset that usually doesn't go down when the market goes down. Instead, an asset like gold that catches a bid when the market catches a cold. So here you see a little bit of the chart. I'm going to go to a full chart here on it of the SLV so you can see both a 5-day and then I'll show you a year-to-date graph of the same from my friends over here at Y Charts. I think overall that the volumes that we're seeing here in the SLV, and there you have a 5-day chart, so I'm sorry, that's a 1-year chart. Here comes the 5-day chart. Ask me later, thank you. There you see that big drop February 28th when people began to reverse positions rather aggressively, and it fell from the 1650 level all the way down as it finished that session on the 28th. It traded all the way down to about 1530. Now we've made back and we're sitting right now at about 1608. So which strikes you want to know were they interested in the SLV? All right, I'll tell you. They're buying time. They're buying out all the way to July 18s. So the July 18 calls, so let's say approximately $2 out of the money, were purchased for 37 cents all the way up to 39 cents. Now they bought 13,500 of these and they sold out of the July 22s. Could be closing, but it appears to be much larger than closing because the volume of trade was similar, 13,585 contracts, and the open interest was 3,300. So a prudent person would assume that that means that they opened on at least 10,000 of those, if not all 13,585 of those. So they have a spread on, a 4-point spread between July 18 and July 22 of this coming summer, and they own the right to take it at 18, and they've given somebody else the right to take it from them at 22. So let's take a look at a slightly longer dated chart than this. Let's give you back to that 1-year chart. And there you see that this past September, just into Labor Day, we peaked at about 1834 for the SLV. So somebody's bet here that we go back towards that, especially if we go back over time. That's why they're buying further out in time. If they thought something was going to happen really fast, they'd buy April options, folks, maybe even March options. But instead, they're buying July options, which implies to me that they think a drift higher over the next several months for the SLV is what they're going to be anticipating. So that's the SLV. Let me pull up the GLD for you and give you a same sort of feel, GLD. And you had that from, in the case of the SLV, folks, we came down from, like I said, 1834-ish, all the way down now to where we're at 1608 in the SLV. That's $2.26. In percentage terms, that is a move, a drop from the September high of last year. That's a drop of about 12%. So, in the case of the GLD, which is the gold ETF, there is a one-year chart. Notice how in September this one didn't peak at the same time as silver. Here's that, approximately same time frame. Let's even push it back to here and say maybe 146.66. We are much higher than that now. In fact, we peaked last week at about, on the 24th, at about 156.10 or thereabouts. And presently we're at 153.98 again. So we've made a 3.25% move just today in this contract. And as I say, this is the one that people generally come for when they think that they want a non-correlate, or at least something that's reverse correlated, sort of like the VIX is. And I'll pull up some VIX information for you shortly. But I just wanted you to see this. Here's the 5-day of gold, which includes that drop. There's that same gap on the 28th as people all of a sudden said, we're so oversold here in the market and perhaps overbought in terms of many of these precious metals, that it sold off from there approximately 154 all the way down to 147. That's a $7 drop out of this one. That, my friends, is a gift. So the activity that you see in the GLD, because of that, created that whoosh to the downside, which is, one of the reasons that I like to jump back in and buy that in particular. All right, so right around, let me pull up. Here I have some of the biggest trades that were going on, and let me give you just an idea. Yesterday, of course, we traded about 29 million options contracts. Today, I'll give you an update shortly, but it was 11 million just a moment ago, or a few moments ago. I think that the activity in these puts in the S&P 500 is interesting because we have a put-call ratio there of about 1.23 right now. That's puts traded to calls. In other words, 1.25 puts trade for every call that trades, which means that we've traded 1.2 million on the put side and only about 1 million on the call side so far in the SPY. The largest trade volumes have been right here at the 300 strike, which is trying to be defended, the 300 strike for the SPY. So that's right tomorrow's expiration, 300. It's hard to define a bet more than that, folks. You're defined right down to, this is a one-day trade, and they're trading those 300 puts. To give you an idea of where they began the day, first trades in these 300 puts were $1.62. 152 of those traded right on the opening today for $1.62. That's when the index was 309.35. Now, where are we at as we head into mid-session? Because we're at 11:45 Eastern time right now. I show us at, let's see, $2.39. So they're up, let's say from $1.60, where I think I said we started the day $1.62. We're at $2.39. So, that's the movement. And right now we're at approximately, let's see, 305.27. So we've fallen 4 full points in the SPY, the SPY, and those puts have moved up by, call it 70 cents or so during the session here today. I'm going to pull up our friends over here in the VIX to give you an update on that one. We've got about 14 minutes before the halftime report begins, and I want to give you guys some good things to watch going into that. VIX action looks like this right now, folks. 248,000 calls to about 182,000 puts. We are hovering for that March, so of course, 2 things quickly, folks. Number 1, VIX, VIX, that is what the spot is. So, for instance, let me pull that up over here on the Yahoo. Let's give you the VIX on Yahoo. This is the spot, meaning if we looked right now today at these calls and puts that make up this index, that index is at a 35, okay? So if you look at where the March futures are trading, however, for the VIX, it's at a different price. Why? Well, because they're the futures. So when I'm looking out here at the March futures, they're trading, they've gone from a trade this morning of 26.05-ish, so let's call it 26. They've moved to right now at mid-session at 11:48 Eastern Time. Those are trading 27.20. So a move up of about $1.20, let's say, give or take. And again, it is not the same thing. They are similar, but they're similar in the way that a spot contract is different from the futures price. So the futures price is presently at 35.23, and you see that right here on the stream, 35.23. And meanwhile, the futures contracts are trading at approximately 27-ish. That means that that 8 points is 8 points of backwardation still. That we've got, the spot trading higher than the futures, which is usually unsustainable, folks. That means that, we're seeing a zenith, a high level for that traders will fade at some point. Now, that worked out great the other day. And we talked about it on the show. We went from a reading of a 49.50 VIX, almost 50 on the spot, all the way down to yesterday as we traded down to 33. Now we're up $1.65 or about 5%, as you can see, to 35.07. They are not trading the same velocity in here that they were. On Friday, that 50 Cent, the guy that owns all those contracts, he owned, again, the March 24s, he owned March 23 calls. He or she owned all the way down to, I believe, about the 21 strike in March. And most of them purchased when the spot VIX was right around 14, as were the futures. They were very close at that time. Now we've gone to the spot being much higher than the futures, and as we went into that backwardation, instead of contango, we saw 50 Cent hedge an awful lot of those gains that they had. And the gains would be anywhere, folks, from 150 million to about $200 million on that one trade alone. And that's because those calls that were purchased at the 21 strike and at the 24 strike and so forth, as this trader got in there and traded Let me see. I want to just pull up these strikes. Those, for instance, they were traded for 50 cents, right? 45 cents. The March 30 calls today are $2.70. So that gives you a little bit of an idea of how, if you were to sell those against the ones you purchased for 45, you're into a 24-30 spread for a credit, a big fat credit of, in the neighborhood of $2.20 or more. And this guy was also selling the 28 calls out there in March. So all of that contributes to just a fabulous trade and a nice tell when that trader began taking those trades, lifting those hedges and saying, you know what, I don't know if I get a lot more than this out of it because the backwardation is so steep that I don't know how sustainable this is for a long period of time, and I'll let somebody else hold them here. All right, so that's where we are. Let me show you a quick one in QE, here we go, QGEN. Because Thermo Fisher came in and said, you know what, we want to buy these guys. We had unusual activity in it. You may have heard me talk about that, but QGEN yesterday obviously was $5 lower than where it is now. Yesterday it closed at, after a little bit of a rally, it closed at about $36-ish, maybe $36.12. We opened today over $41.50 to the upside. And which calls were they buying? Well, let me pull it up and take a look here. Let's see here. First of all, we're going to go in here and if I can, depending on connectivity, folks, there we go. Let's go back to QGEN. They were buying March 36s and March 37 calls in QGEN. So I'm going to try to pull that up. Let's see if it lets me. Maybe, maybe not. Let's see. Finance. By the way, Robinhood down for another day. So I just saw our Kate Rooney report over at CNBC. That's not good, nor is this. Doesn't look like it's going to let me pull up those for you, so I'll have to just show you over here. The right to buy it at 36 when it's trading at 41 is at least $5. They were paying $1.50 to $1.70 for those, so that's a nice big fat winner. QGEN. I tweeted that one out earlier today, so take a look at that, please, to see exactly how that bad boy played out. And let me take a look and maybe give you guys one more before we, crude oil, by the way, trading into the green again, which is a decent sign. Here's GLD. So I just had talked about GLD moments ago with you guys. Just one sec. That GLD April 159 calls. Okay, so let's examine that. In the case of SLV, they were buying all the way out till July. And so they're giving it a lot of time for it to rise $2 from 16 to 18 in rough terms. Today, our heat seeker shows 30,000 of the April 159 calls trading for $2.50, and then they sold April 164 calls for $1.45. So what does that mean, folks? Well, let me break it down for you. They paid $2.50, we'll call it. They collected $1.45 in rough terms. So let's say that they paid roughly $1.05, or call it $1. That means, here comes the GLD again, GLD. That means that after that big sell-off carried us down to 147, and after we moved back up over the last little bit here into the 150s, that somebody's putting on a trade, a pretty big trade, that says we think this one trades even higher in the short term, which is, again, there it is, folks, on Feb 27th when we were 156, so approximately almost $2 higher than where we are right now. We're seeing those 159 calls for 250 versus these others for 145. That means that we're only putting a buck on the table. So in other words, $100, a dollar, I slide the decimal place over 2 places, and it's $100 for each option. So this particular trader traded 30,000 of those. 30,000 options, pretty big play. So $1 times 30,000 obviously is, I'm sorry, $100. $100 times 30,000 is what was invested, and that is a $3 million trade, which is enough to get you to pay attention. This spread, the 159, 164 spread, is a $5 spread. So the trader paid a dollar for something that could go to 5. That would mean that they have the potential, not saying they get all of this, but they have the potential of a $400 reward times 30,000 contracts, which would be 12 million. So, you guys could do that math pretty easy. In other words, you could turn a $3 million investment into 12. And you're telling your friends that you've got, you've got their back. Whoever this particular trader is saying, you know what, just in case, against everything else in our portfolio, let's just throw on a little more protection, because what if central banks decide to throw another rate cut, take us deeper into negative tomorrow as far as some of those foreign jurisdictions? What would that do to the markets? And if it does something similar to what the United States saw when our Fed cut 50 basis points today, that's one of the things they're focused on. So that's one of the things I'm going to be leaving you guys with, that there's ways to hedge. You can hedge with the SPY. You can hedge with the VIX. There are lots of ways that you can put yourself in a position to win without making sure that that you've got as much risk on as some of these folks think they need to have on at times. And make sure you tune in at the noon hour today, because we've got a heck of a lineup coming at you. Mohammed El-Arian, Mark Lazary, and several other big guests on the Halftime Report. I thank you for joining me here today, folks. We'll come at you with a noon update in just a little bit. I'll turn it over to the judge and the Halftime Report. Thank you for joining us.